Welcome in this video. XN coin is going horizontally. Where is the direction? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. This declining trend line, which is prominent on the chart and a crucial element in technical analysis, is currently at the center of price action. The price has been respecting this trend line for a long time and has continued its downward movement, acting as a kind of suppressive barrier. However, when we look at the current pattern and the combination of technical structures, there is a possibility that if this trend line is broken, a very strong uptrend may begin. This is because once a price that has been under pressure for a long time is freed from this pressure, it finds a free field of action as if it has been freed from its chains, which can trigger fast and strong upward price movements. Downtrend lines usually occur when the bears take control of the markets and the price faces lower levels with each reaction rally. But over time, buyers gain strength, volume increases, and the price starts to touch this falling line. These contacts can be a harbinger of a breakout. In the current situation, a similar structure is noteworthy. The price is very close to the falling trend line, and the recent candlestick patterns are showing increasing pressure on this line. This could signal that buyers are getting ready to take control and sellers' strength is about to break. Trend breakouts are important signals not only from a technical point of view, but also from a psychological one. Because the perception that a prolonged downtrend has come to an end creates a sense of trend reversal in investor psychology. This in turn allows new buyers to enter the market and prices gain upward momentum. If a similar breakout occurs in the current position, it may not just be a short-term reaction, but the beginning of a medium to long-term uptrend. This is because such downtrend breakouts have often been the trigger for larger structural transformations. Moreover, the increase in volume accompanying the current price action is another important signal that this breakout could happen soon. Volume support is essential for trend breakouts to be successful and for lasting upside to follow. This support seems to have started to form, indicating that the pressure on the price is very close to breaking. Especially as the bodies of the candles are getting bigger and the price is closing at higher and higher levels, buyers are starting to dominate. Therefore, the falling trend line is no longer just a resistance, but also a psychological threshold, which, if breached, could open a new chapter for the price. At this point, it is important for traders to be able to evaluate the pullbacks that may occur after the trend breakout, because most of the time, after breaking the trend line, the price retraces for a short period of time and retests that area. This is called a retest in technical analysis, and a successful retest is usually followed by a sharp bullish move. For this reason, the retest process should be monitored as carefully as the trend breakout. If the price successfully completes this process and resumes its upward movement, then the persistence of the uptrend will be much higher. To summarize, this falling trend line is not only a technical level, but also a threshold point that will determine the direction of the market. If the price breaks through this line, it could unleash long-suppressed potential and set in motion strong upside moves. Such breakouts usually signal times when the momentum increases rapidly, buyers start to dominate the market, and the uptrend turns into a stronger structure. Therefore, it is extremely important to monitor and evaluate this breakout and create strategic positions when necessary. In the event of a break above the trend, it is highly likely that the price will move upwards with great momentum, which could present a serious opportunity for investors. But we can't decide the analysis only with trends. Let's look at other metrics. Stay tuned. One of the important building blocks that stands out on the chart is a strong support zone, positioned just below the price. This area has been tested by the price many times in the past, and each time, it has been an area where buyers have effectively stepped in, moving the price upwards. In technical analysis, such repeatedly tested support zones are of great importance, as each test confirms the strength of this zone and builds confidence for investors. In particular, the fact that buyers have been active at this level many times before clearly shows that this support zone is a strong ground that has been accepted by the participants in the market. Such areas stand out as points where the price can breathe and recover during a decline. By its very nature, the market does not move up or down continuously. From time to time, it pauses at certain levels and enters moments of decision. Such support levels are the areas where the market pauses, regains strength, and then turns its direction upwards again. At the moment, the price is hovering very close to this critical zone, and if there is a pullback towards it, an upside reaction from the same level will be very likely, as it has been in the past. Moreover, this support zone is not only a horizontal level, but also a confluence of investor psychology. Because the reactions taken from this level in the past have left a trace in investor memory. Such levels can be described as remembered areas. Buyers have seen this area work and have come to expect the same reaction when it is approached again. In a way, this becomes a self-fulfilling scenario. As buyers become active, the price starts to move upwards again, which further strengthens the support zone. Technically, the psychological significance of this area is as valuable as its graphical position. Another important aspect is that this support level is confirmed on different time frames. For example, the fact that this level works as support on both the 4-hour and daily charts shows that traders are watching and paying attention to this area on very different scales. This kind of time frame alignment makes the support level even more reliable, because the more investors focus on this area, the more broad-based and persistent the buying pressure becomes. This makes it harder for the price to break this level, leading to repeated upward movements. In addition, volume increases may also be noticeable near this support point. In the past, the increase in volumes when the price came to this area is a clear indication that strong buying has come into play here. If this level is touched again and a similar increase in volume is observed, this would signal that buyers are regaining strength and could push the price higher again. Long wick candles in particular are one of the key signs that buyers are aggressively pushing the price higher from the bottom. And if such candle patterns have been seen at this support zone before, expect a similar reaction this time around. However, such support levels are not only short-term reaction zones, but can also be the starting point of larger trend reversals. If the price bounces strongly off this support and establishes an upside structure, it could be not only a temporary rebound, but also a harbinger of a larger uptrend. Such moves are especially common at critical thresholds where downtrends end and uptrends begin. Therefore, this support zone is not only a technical line, but also a potential trend reversal area. The clearly visible ascending trend line that is formed on the RSI indicator is currently providing important data that is noteworthy for technical analysis. This ascending structure indicates that the RSI has gained upward momentum by forming stronger lows in recent times, while at the same time suggesting that buying pressure is gradually increasing. This kind of structure is an important signal, especially for traders, because such trends on the RSI can foreshadow some possibilities before price movements. The presence of a trend line on an oscillator like the RSI provides clues to the momentum of underlying price movements. At the moment, the RSI is once again close to this rising trend line. This is a pattern that is being watched and evaluated by the vast majority of market participants. If the RSI touches this trend line, as it has done in previous moves, it could trigger a possible upside reaction. If the RSI reacts at this level and performs an upward reversal, this could cause the price to similarly accelerate upwards. This is because there is a close relationship between the RSI and price action. Upward reversals in the RSI often result in a rise in prices. This is an important leading indicator for market participants. Moreover, this rising trend line is not just a slash, but a structure that influences traders' decisions. When the RSI stays above this trend, it shows that the market still retains its strength. Every contact indicates that this trend is defended to the upside, and the market psychology is still positive. Unless it breaks below this line, the overall mood remains positive. If the RSI manages to bounce up from this trend line once again, this move could trigger not only a rebound on the oscillator side, but also a new bullish wave in price. We should expect it to touch the RSI trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.